analysts at Norrenberger expect the Nigerian equities market to remain uncertain given the current challenging macroeconomic conditions and ongoing bank recapitalization efforts. Meanwhile, the securities firm expects the inflation rate to slightly inch up in the month of June and FX stabilization within the ranges of 1,002 to 1,500 Naira to the US dollar. Ekene Oyeka, Securities Trader at Norrenberger, joins me now for the highlights of market movements this month and the outlook for June. Ekene, thank you so much. Pleasure to have you on the show today.
Yeah, thank you for having me, Esther.
It's been quite a month for equities investors in Nigeria. We had the MPC meeting, we had the GDP numbers that came out 2.9% lower than what we had in the fourth quarter of last year. And we also had inflation printing higher, 33.6%. But when you take all of that into account, for you, what would you say were the major highlights?
So most of the major highlights, like you've rightly mentioned, we saw the increase in the MPR by 26.25%. That is 150 basis points in the markets. We also saw the Nigerian Bureau of Statistics also release the result concerning the GDP rates actually, and that was actually majorly driven by the better performance in the oil producing sector. And also we also saw the non-oil sector too, like the financial services, ICT, and also agricultural services actually coming into play actually made the market look very, very impressive in terms of the performances in the market. So with all these things that really happened, we get to see some certain level of improvements in terms of movement in other sectors of the economy.
Right. The market, the all-share index began the month at around 90,000 points. We're closing at just over 99,000 points. Talk to us about, some of the best performers this month, those stocks or sectors that give the index a major boost.
So one of the major sector that actually gave that particular boost that we've not seen for quite a number of time is the oil and gas sector. Right, because we saw that it actually impacted on GDP of the country. We intend to see that growth continue to sustain itself for a long period of time. And also the banking sector, so we can't take out the banking sector. And also the consumer goods, we tend to see a recovery happening in that space too, the likes of Nestle and the rest of others. So we expect to see going into June, getting to see all this. If this performance can be actually sustained, we get to see quite a slight recovery in the equities market.
Right. But what would you say for the oil and gas sector? Yes, it gave the index a good boost this month. But in terms of the outlook, how investors feel about this sector, this sentiment towards the sector, is the outlook positive for investors? We talk about, we're still having conversations about the benefits so far of the PIA and, investments coming into the sector. We've heard a couple of stories of one or two investors, especially the IOCs, divesting away, obviously creating opportunities for indigenous companies. But are investors positive on the sector?
Yeah, they are. Basically because a very good news that came into the market has to do with the Dangote refinery, as we say, trying to list both on the Nigerian Stock Exchange and also offshore, that is the New York Stock Exchange. So with this kind of belief in the market, because when investors have that sentiment and belief in the markets, we tend to see such a level of performance and drive in those sectors. So the oil and gas sector, if the production keeps improving, right, we see the oil barrel actually increase in the market. So if those things can be put into place, correctly, definitely it's going to have a certain level of sentiment. Investors have this certain level of confidence of how these sectors actually perform. So the oil and gas sector is one sector that we need to look after right now in the market.
Right. Now, one sector I always keep an eye on is the retail as a consumer goods, especially fast-moving consumer goods sector. With the increase in MPR to over 26%, we know that, the story of the consumer wallet that continues to shrink as a result of higher climbing inflation. What is your outlook for this sector? Or how would you say, first of all, they performed this month? Cost of financing rising, cost of operations, and ensuring or trying to, that balancing act of not raising prices to the point where there will be, that pushback from consumers.
Yeah. So we don't need to forget the fact that the result that really came out from the consumer goods was that last year, we saw a huge losses in their FX, because definitely most of their operations are being domiciled on FX, and that has actually, has actually created a certain level of negativity in their books. But I believe that what has actually happened right now is we've seen some reconstructions in those particular sectors, right? One. Secondly, also, they've actually tried to see how they can actually reduce, their FX exposure, because once you can able to reduce your FX exposure, right, and look inwardly, right, it tends to like increase your operational, activity. So what has actually happened on that space is the fact that they've actually seen the fact that, okay, the FX, right, can actually stable, like between 1,200 to 1,050, and they actually try to plan, their cost within this stability in the FX. So that does actually get to see that kind of improvement in terms of their numbers right now.
Right. I mean, obviously, a very difficult business environment, not just for the consumer goods sector, for all the for every business in the country. But let's talk about going into the new month, a trading month, the month of June, portfolio realignment. This is the time when, of course, investors, especially the big investors, most sophisticated investors, realign their portfolio. So, but for you, what would a typical portfolio look like based on market movements this month? We've seen banks are always a favorite. We've seen some weakness in a couple of sectors, but what would it look like?
So in terms of portfolio restructuring or portfolio rebalancing, right? So we don't need to take out the fact that MPR actually is actually on the high side, right? That is 26.2%, which actually spurred some kind of interest in terms of FPIs coming to the country. So for a typical portfolio, right, in terms of structuring it, right, so we tend to look at short-term investment instrument in the fixed income market, and also look at for, let's say medium to long-term investments in the equities market, just to create, just so that you can be able to mitigate the risk in that portfolio. So bringing all those things into the books, into the basket, right, it has a way of streamlining the risk potentials in that particular portfolio. So short-term, short to long-term instruments in the fixed income market, and also medium to long-term in the equities market, as the stocks that are actually we see potentials in terms of price appreciations and capital gains, can actually create a more formidable portfolio.
Right, we're going to have to leave it there. I wish we had more time, but we're going to have to leave it there. Thank you, Ekene, for talking to us today. Ekene Oyeka, Securities Trader at Norrenberger.